35 on page number 6.60. Pankaj, Naresh and Saurabh are partners in the ratio 3:2:1. This is a question from NCERT modified, and then the balance sheet is given. On 1st April 2020, Naresh retired. Naresh has retired and some certain additional informations are given. So first of all, we can see that point number D, it is given new profit sharing ratio of Pankaj and Saurabh is decided to be 5:1. Old and new ratios are given. So we need to calculate the gain or sacrifice. So here I have calculated new share minus old share. So that comes out to be, for Pankaj it is 2/6 and for Saurabh it is nil. So this is the only partner who is gaining. Now what is the amount of goodwill that is to be adjusted is, total goodwill is given in point number B, goodwill of the firm valued at 42,000 and 2/6 is to be adjusted for the retiring partner. So 14,000 is to be given to the retiring partner, which is to be given in the gaining ratio, and only the gain is made by Pankaj. So journal entry will be Pankaj's capital account debit to Naresh's capital account, gaining partner to sacrificing partner. Now let us prepare the revaluation account. Point number A, premises have appreciated by 20%, so that increase has been shown in the credit side. Then stock depreciated by 10%, the decrease has in asset has been shown in the debit side. Next one is, and provision for doubtful debts was to be made at 5% on data. So if I make 5%, that is 6,000, 5% will be 300. So that is again the decrease in liability by rupees 100. Earlier it was 400, now it is coming out to be 300. So that decrease in the liability has been shown in the credit side. Further, provision for legal damages is to be made at for rupees 1200. So again increase in the liability has shown in the debit side. And furniture to be brought up to 45,000. Now the furniture is 41 and it is to be brought up to 45. 4,000 increase, and increase in the value of asset will be shown in the credit side. So taking out the difference of the two sides, that difference is profit, and that has been divided among the partners in their old profit sharing ratio, 9,000, 6,000 and 3,000. Now coming to the partners capital account, that will start with the balance. So that is 46,000, 30,000 and 20,000 from the balance sheet. Then this profit of revaluation I have written here, 9,000, 6,000 and 3,000. There is a general reserve in the balance sheet of 12,000 that has been distributed in the old profit sharing ratio. One general entry we have written for the adjustment of goodwill previously, so that I have written by Pankaj's capital 14,000 to Naresh's capital 14,000. And it is given rupees 20, point number C in the additional information, rupees 26,000 from Naresh capital to be transferred to his loan account. So I have transferred 26,000 to the loan account, and the balance paid through bank. If required, necessary loan may be obtained from the bank. So total of 54,000 was to be paid to Naresh. When we take out this one, Naresh, total 54,000 is to be paid. So 26 we are transferring to Naresh's loan, and 28 is to be paid through the bank. Whatever the excess is there required in the bank balance, that will be raised through the bank loan account. That I'll show. Anyhow, now we are making the difference 28,000 payable through the bank, and here in P's and S it will be total minus this item, 47 is the balance, and here this total, and the balance is 25,000. 20 plus 3,000 plus 2,000, that is 25,000 is the balance for Saurabh. So 28,000 will be paid through the bank for Naresh. Now the preparation of the balance sheet with the change values, debtors 6,000 and provision from 4,000 to 3,000. So now it is 57,000. Stock is to be reduced, so I have reduced by 900. Furniture was to be increased by 4,000, so 41 instead of 41 it will be 45. Premises is also to be increased, so 96,000 I have written. Creditors, the same value of 15,000 written. Bills payable 12,000, no changes. Outstanding salary 2,200, no changes. Provision for legal damages 7,200, because 1,200 more we have shown in the revaluation account. Earlier in the balance sheet it is given 6,000, so total it is 7,200. Bank loan 20,400, In the working note, I'll show by preparing the bank account how this 20,400 came. Naresh loan, in the Naresh capital, the partners capital account, we have shown Naresh loan is 26,000 and capital balances for Pankaj and Naresh comes out to be 47,000 and 25,000 from the partners capital account. Now let us see the bank account. The balance given in the bank account is 7,600 in the balance sheet. Naresh capital to be paid is how much? 28,000. So how much more is required? 20,400 comes out to be the difference, and in the question in the additional information is given that the balance be paid through bank if required necessary loan may be taken. So that is being written as bank loan account 20,400, which has been shown in the balance sheet in the liability side as well. So this is how the balance sheet match, that is 1,54,800, 1,54,800 both the sides.